Stop thinking that the best technology always wins. Seriously, if you own ASML stock because you thought nobody could say no to their most advanced machine, you just lost $17 billion. Here is the counterintuitive truth that Wall Street is whispering, but nobody wants to hear. Your biggest customer can kill your future by saying one word: expensive. TSMC, ASML's largest customer, representing 45% of their sales, just refused to buy ASML's new High-NA EUV machines. Price tag: almost $4 billion per machine. TSMC's response: very expensive. ASML's stock dropped 3%, $16.8 billion of market value evaporated. But here is the real question everyone is missing. Is this the end of ASML's growth story, or the buying opportunity of the decade? Let me break down exactly what happened, and stay until the end for the 3 secrets that will change how you evaluate every single monopoly stock from now on. I'll admit something. I used to believe that if a company had a monopoly on critical technology, customers would pay any price. I was wrong. I watched a different monopoly stock crash when their biggest customer said, "Too expensive." The stock eventually recovered, but only after 3 years of pain. I learned a painful lesson. Monopolies are powerful, but customers have limits. Today, I'm going to show you exactly what TSMC's rejection means for ASML. We're going to look at the technology, the pricing, the alternatives, the timeline, and by the end, you will know whether this $17 billion drop is a panic or a warning. Stay with me. Let's start with exactly what happened. The customer, TSMC, the world's largest chip maker. They make chips for Apple, Nvidia, AMD, Qualcomm. Everyone. The product, ASML's new High-NA EUV machines, the most advanced lithography machines on Earth. The price, $3.5 to $4.1 billion per machine. TSMC's response: we are not buying them. Their exact words: very expensive. The market reaction: ASML stock dropped 3%. Not a crash, but a signal. The math: ASML's market value dropped by 14.3 billion euros. That is approximately $16.8 billion. Gone. In hours. Why does this matter so much? TSMC is not just any customer. TSMC accounts for 45% of ASML's total sales. When your biggest customer says no to your most expensive product, your revenue growth target is in trouble. The counterintuitive truth: ASML's 2030 revenue target of 60 billion euros was built on High-NA sales. If TSMC doesn't buy, that target might be impossible. Before we go further, let me explain what High-NA EUV actually is. EUV stands for Extreme Ultraviolet Lithography. It is the technology used to etch incredibly tiny circuits onto silicon wafers. The smaller the circuits, the more powerful the chip. ASML has a monopoly on EUV. No one else makes these machines. Not Canon, not Nikon, no one. Standard EUV is already in use. TSMC has about 170 of these machines installed today. High-NA EUV is the next generation. High-NA stands for High Numerical Aperture. In simple terms, it can etch even smaller circuits, even more transistors on a chip. The problem? The price. Standard EUV machines cost around $200 to $300 million. High-NA EUV machines cost $350 million to $400 million? No. $3.5 to $4.1 billion. 10 times more expensive. The counterintuitive truth? TSMC is saying, we don't need that level of precision for our next chips. They are developing a new technology called A13 chip technology that works perfectly fine with standard EUV. Why pay $4 billion for a machine when a $300 million machine does the job? So, here is TSMC's actual plan. Step 1. They will continue using their existing 170 standard EUV machines. They already own them, and they're paid for. Step 2. They'll roll out their new A13 chip technology. This technology was designed to work with standard EUV, not High-NA. Step 3? Wait. TSMC says they will not consider High-NA EUV for mass production until at least 2029. That is 3 years from now. Now, what does this mean for ASML? ASML's €60 billion 2030 revenue target actually assumed TSMC would start buying High-NA machines in 2027 or 2028. If TSMC waits until 2029 or later, well, that target is at risk. So who might buy High-NA instead? Intel has already ordered some. Samsung might as well. But honestly, Intel's market share is much smaller than TSMC's. And Samsung's too. Here's the counterintuitive truth. TSMC is not saying never. TSMC is saying not yet. The question is, can ASML survive 3 to 4 years without its biggest customer buying its most expensive product? The answer is yes. ASML is still profitable, still growing, and still a monopoly. But the growth story? That definitely takes a hit. Now let's look at what the analysts are saying, because honestly the market panicked. But analysts? They are a bit calmer. UBS called this a modest negative. Not a disaster, not a death sentence, just a modest negative. Citi made an interesting point too. Citi says this is actually TSMC's same stance from before. Nothing new here. TSMC has always been cautious on High-NA pricing. They've always said, too expensive. The only difference now? Well, they said it publicly. The counterintuitive truth? The market reaction might be overblown. ASML dropped 3% and lost $17 billion in value. But if TSMC's stance hasn't actually changed, was this just a headline panic? Here is what analysts are watching. Will other customers follow TSMC? If Intel and Samsung also delay? That is a real problem. Will ASML lower prices? They have room. Gross margins are 53%. They could cut prices to drive demand. Will TSMC change their mind by 2028? Technology needs evolve. A13 might need High-NA after all. The trade. The panic might be a buying opportunity, or it might be the first sign of a real problem. Let me leave you with the 3 secrets that connect everything we just discussed. Secret number 1. The monopoly pricing illusion. Having a monopoly does not mean you can charge any price. Customers have limits. TSMC just showed us their limit. $4 billion per machine is too high. Even monopolies must price rationally. ASML may need to lower High-NA prices to drive adoption. Secret number 2. The customer concentration trap. ASML gets 45% of sales from one customer. That is dangerous. No matter how good your technology is, if TSMC sneezes, ASML catches a cold. Today, TSMC sneezed. ASML lost $17 billion. Diversification matters, even for monopolies. Secret number 3. The headline panic premium. When a headline scares the market, patient investors get an opportunity. The question is this headline different from past headlines? TSMC has said too expensive before. The stock dropped before. It recovered. But this time, the stakes are higher because ASML's 2030 target depends on High-NA. Is this time different? That is the million-dollar question. So, what should you actually do with this information? If you already own ASML, do not panic sell based on one customer's comment. ASML is still profitable, still growing, still a monopoly on standard EUV. But do watch 2 things. First, will Intel and Samsung step up to buy High-NA? Second, will ASML lower prices to attract TSMC? If you do not own ASML, this might be an entry opportunity or a value trap. The difference depends on whether TSMC changes its mind by 2028. The cautious approach. Wait for the next earnings call. Listen to what ASML's CEO says about High-NA demand. If they sound worried, wait longer. The aggressive approach, dollar cost average in now. If the stock drops another 10 to 15%, buy more. Assume TSMC will eventually need High-NA by 2030 or 2031. The counterintuitive truth? The best time to buy a monopoly is when customers complain about price, because eventually, they pay. The question is, how long will eventually take? Here is my question for you. Would you pay $4 billion for a machine that makes chips slightly smaller, or is TSMC right to wait? Drop your answer in the comments. I read every single one. Like and subscribe if you want more myth-busting analysis on semiconductor stocks. I'll see you in the next video.